Welcome. This session is titled Digital Wealth, Using Digital Tools to Expand Access and Improve Client Outcomes. I'm very pleased over the next 20 minutes to have two senior managing directors from Invesco with me. Colin Meadows, head of Invesco's Digital Ventures, and Andrew Schlossberg, head of the Americas. Welcome to you both.
Thanks, Donie.
Thanks, Donie.
So Colin and Andrew, let's begin. The audience may not know that Invesco has made it their goal to become the most client-centric firm in asset management, which is a pretty audacious, in a good way, goal. What does that mean to both of you, and why is it so important, especially in these times?
So look, I'm happy to start, Donie. Look, I think for me, it means working back from client need to Invesco solution. And so it's really about taking a hard look at client pain points, competitive gaps, anticipating future needs, and then coming up with a service or solution that meets those. And I think it's particularly relevant given the enormous change that's being created with technology, where business models and relationships between managers, intermediaries, and investors are really being upended.
Yeah, and Donie, maybe I just add, and it's always difficult to go second and follow Colin, but I'd probably say it's being a good listener and observing what clients are saying, what they're doing, and challenges they're facing. And as Colin was pointing out, we had historically done that in a more traditional sense, but the benefits of digital and data, which I'm sure we'll get into, have really enhanced that dynamic.
Right. So let's start with back to the title of the session, which is using digital tools to expand and improve client outcomes. So Colin, let's begin with you. Over the past decade or so, we've seen the rise of startups, the so-called robo-advisors within the investment space, with firms like Betterment, Wealthfront, Robinhood, or even micro-investing with apps like we heard earlier today from Acorn. The question is really, what's Invesco's digital strategy to address this? And what's your personal opinion on the differences between maybe the completely automated advice via technology versus maybe intertwining with human interaction?
So, we share their belief that technology is going to fundamentally transform wealth management. Honestly, it's already happening. I think where we may differ a bit with some of the robos is, our belief that wealth management will continue to be an advisor-led, and in many cases, an advisor-centric effort, but it'll be technology-enabled in a fundamental way. And this is where we think software is going to fundamentally change that advisor and client experience. Advisors are going to retain an important role, but the tools at their disposal are going to advance tremendously. And so our overall strategy is to put tools in the hands of investment managers, asset owners, intermediaries, and in some cases, end investors that will do a couple things. So for advisors, we're hoping to enable them to improve practice efficiency, for advisors and importantly, end investors, helping them to improve financial wellness and ultimately improve the investment outcomes for those end investors. We really started our journey 4 years ago with GemStep in the robo-advice space. And again, we had a view even then that advisors would remain at the center of that investment experience, but we could use digital tools to improve the efficiency of client onboarding, goal setting, and ultimately transacting. And that would help advisors serve clients more productively and in some cases serve an expanded roster of clients. What it also helped us realize is that there are many other elements to the advice ecosystem that could be digitally enabled. So everything from practice management through billing and reporting, trading and rebalancing, and portfolio analytics were all services that we thought were central to the client experience that could be digitally enabled. And frankly, that was the roadmap for a number of the acquisitions and build outs that we've had in the space over the last 2.5, 3 years. We think we've got an enormous opportunity to deliver those services as standalone services and or as bundled solutions to get after the efficiency and productivity and investment outcome elements that I'd mentioned previously.
So Andrew, if you look at the other areas of Invesco's business, the wealth manager side and the institutional side, does that play out the same in terms of you see in the digitization across those channels as well?
Yeah. So in our more traditional business, we're a B2B business. So as Donie, as you said, we're engaging with institutions on behalf of their employees or participants, or financial institutions through financial advisors, through to end retail investors. And we were seeing those trends, obviously, that Colin was just mentioning way before COVID. And now we're operating 100% digitally and virtually in the way that we engage with those intermediaries or institutions. I'd probably note a couple of things we've seen in particular ramp up in the last 6 months, and we think will continue. I'd say the first is a real reliance on I guess what we call tailored content. So that's really about seeing a lot more demand for content through multimedia. So web traffic, of course, is up something like 30-40% since March. We've seen 5 times increases in our thought leadership through our blogs. We've seen 30% increases in organic search, and we're seeing social media platforms like LinkedIn's a big one for us, through video engagement up 3 times. So on-demand access to multimedia, definitely. The second area that we've seen hyper advancement really in is digital investment tools, which we can give our traditional sales teams an edge in the way that they do client engagement with those intermediated audiences. And we've been building and built out 2 styles of digital tools, which we largely rely on portfolio analytics on a platform we call Vision. And so we're able to put those tools forward to our sales teams. The first style is to help them with conversation enablers. So our traditional salespeople are able to illustrate asset allocation concepts in real time with live examples. Or more advanced sort of style that we're using of digital tools is actually doing portfolio analytics to demonstrate for these intermediated clients and their end clients' portfolios, are they taking too much risk, too little risk, and not delivering against the desired investment outcome. And then the last thing I'd probably say is we're seeing more need for data and client insights that we had always valued and had always been an important asset to us, but we're seeing that come together in a more impactful way. And we're getting a real 360-degree view of our clients through data, whether that's data we collect through transactions with clients, behavioral data that we pick up, insights from our sales teams, or even our clients and the way they're interacting indirectly through social media or advertising. And all of that is kind of coming together as a valuable asset for us as well. So I guess a long-winded way, Donie, of saying, absolutely, we're seeing the traditional part of our business sort of upended by digital and data.
Yeah, my guess is that's sort of amplified in the environment we're in, but it's something that's not going away.
No, it's I think we were seeing these trends over the last few years in the industry, but we didn't get to test them in their full capacity until the last 6 months, and we could definitely see the acceleration.
Yeah. So, Colin, maybe a question that can resonate with some of the audience. We have lots of startups and fintechs attending this session. If you look at the rise of the fintechs, they typically disrupt traditional services. They look at incumbents, they look at gaps, maybe not Invesco, but they look at gaps that those incumbents maybe don't give the time, and then they come and they fill those gaps, many cases with a very superior customer experience. But on the other side, they may not have the client base or the tools, et cetera, that maybe some of the incumbents have. So a long-winded way of saying, how do you see the opportunities between partnerships with companies like Invesco and startups, and any advice for startups in the audience here if they want to work with companies like Invesco?
So it's a great question. I think a couple of thoughts. So one of the things we've explicitly tried to do in building out what we're calling Invesco Digital Ventures is to marry the software development commercialization side, right, in the businesses that I mentioned earlier, with digital innovation and investment. And there's a couple of ways that we try and do that. So one is by leveraging Invesco's presence as a venture investor. We think that that's a tremendous platform for us. Invesco Private Capital Partners has been investing in venture funds and direct investments for more than 25 years. It's a great vantage point to see what's going on in technology, particularly in the early stage standpoint. But we've also leaned heavily on them as a listening post in the fintech space. It's also enabled us to get a better sense of how to engage with early and mid stage firms, and frankly, what they need from a corporate partner. And I think it's led to a fair bit of flexibility and agility on our side as to how to engage. Right, it's very easy for a large company like Invesco to be viewed as a behemoth, right? If you're a small startup and you try and figure out kind of where you go and how you interact and how you make things happen. What we've tried to do is streamline those processes, and in some cases act as a lab where we can run pilots with some of our smaller partners. So that's one way. The other way we've tried to do it is just by actively partnering more broadly with the innovation community. And so we've been able to leverage Invesco's technology strategy, innovation, and planning group, Donie, that you've established, which is just a terrific resource for all of us. We're founding members of Engage Ventures here in Atlanta. I think something like 50 startup companies have gone through their process, and we can act as a source of funding, an early client, an advisor, right, to all those firms. And we view all of those roles as important to the journey for startups. We also are members of other organizations like Silicon Foundry, which is a member advisory platform on the West Coast. So look, our view is that this broad ecosystem really helps us as a firm see early warning signs, new competitors, client pain points that aren't necessarily being met, that are being filled by startups or that we can fill. It also helps us understand trends from a broader perspective. And then it frankly helps us from a connectivity standpoint to be a frankly good partner to the innovation community.
Maybe continuing the disruption and maybe seed some ideas in the audience. The question to both of you, maybe begin with Colin. If you look at, some of the advancements in technology with the likes of fractional shares, tokenization, and so forth, what's your view if you sort of zoom out 5 to 10 years on the impact of asset management?
So look, I think the biggest disruption in the asset management industry is the ability to leverage technology to deliver, frankly, what is delivered in so many other arenas, which is personalization. So, at the end of the day, an investment service product, right, that's tailored to my goals, my financial situation, my family situation, my tax regime, my risk appetite, my investment constraints we think is ultimately going to be the winning kind of end state. Our view is fractional shares, tokenization, and artificial learning really play a part in delivering this end state because they allow us to do personalization at scale. And so, historically, the only way to get that level of customization is if you had a ton of wealth to invest. We can now do it for people who are just starting out in their wealth building journey. And so I do think that's going to be the frankly biggest disruption to our space over the coming number of years. We are conducting a few pilots, particularly in the real estate tokenization space, partnered with an institutional fund and a couple of fintech startups in the UK and Switzerland that is frankly looking to do exactly what I mentioned earlier by bringing more asset class choice to the ordinary investor. We also thought it was important that we made Invesco Vision, which Andrew mentioned earlier, which is our portfolio analytics platform, really a formal part of our digital ventures organization. So our view is if you can marry those portfolio analytics capabilities with our other software services, we can help create this end state. So last thing I'll say, tech is definitely outpacing regulation here. And so while a ton of things are possible, it's taking a bit for distribution channels and ecosystems that aren't yet in place to support widespread adoption, but we think those get solved. And we're trying to get ahead of that outcome now.
Andrew, similar view or different?
I'll give a different angle maybe to it. I think that 10 years ago, as ETFs started to sort of explode and take off in the asset management industry, one of the things that has been and had been really appealing about them, was their ability, or is their ability, to allow investors to be very tactical in where they make bets and strategic in how they put together portfolios. And I'd say that's been proven out by the asset base that's now in ETFs. So I absolutely echo what Colin was saying.
Great. Right. So maybe a last question to both of you. 2020 has been, I don't really know what word, there's no word to describe it, but both economically and socially. And I think we'll be remiss to pass an opportunity to talk to the audience about diversity and inclusion. So the question is more, what is Invesco doing to expand the access of digital advice to both gender diversity and minorities? And either of you can start with that one.
I'm happy to start, Andrew.
Yeah.
Oh, sure. So look, I do believe that digital tools can really be used to improve what I'll broadly call financial wellness, which is a huge challenge for many communities of color. Obviously, economic opportunity is our biggest challenge, but just basic financial advice is another one. And so what we've seen and what we've already built, right, is that digital tools can allow high quality advice to be delivered consistently and efficiently, and really get people on a path to long-term wealth creation even before they have a ton of wealth. And so I do think that the fintech community has a big role and honestly a responsibility to play here, and we're looking to play our part in that.
Yeah, I mean, I think Colin absolutely nailed the point about financial wellness, and one of the things that we believe in ensuring we employ that and put the money where our mouth is investing in financial literacy in communities where we are, and we're large here in Atlanta. We have big presence in New York, and I think we found that through partnership with schools, through partnership with other institutions, and really getting engaged that way, so that our entire employee base can actually ensure that we're creating financial wellness for everybody. And so I'll just plug a couple of them here. Just hopefully others are involved with lots of things, but might want to get involved in some of this with us. There's something called Rock the Street that we've been involved in New York with Stuyvesant High School, and we plan to, for those here in Atlanta, do something similar with Brady High School, and that's all about financial education with high school girls. We're working with a local high school here in Atlanta, and through things like Junior Achievements, BizTown in Atlanta, and all of these are about real life experiences in business creation and financial creation. And then lastly, we're working closely with the NCAA as their asset management sponsor in promoting financial literacy, both in the in-person sense and in the digital and virtual sense. And we're going to continue to work on that. So I think being in community and working through all the resources we have is going to be really important to deliver what Colin was describing.
That's great. And that's a really nice way to end, I think. So thank you both for your time and sharing some of your insights on Invesco's journey into digital wealth. Thank you.